Picture this. Your Hong Kong company is set up, your global bank accounts are approved, business is booming. Then one morning, you log in to pay your employees and you see this message. Account frozen. This isn't a bad luck, and it isn't limited to just one type of bank account. Whether you use a modern fintech like Wise or traditional giants like HSBC, the compliance algorithms are almost identical. Once that red flag is triggered, unfreezing your money is a nightmare. I deal with this compliance team every single day, so I know exactly what triggers their system. Hi, I'm Raymond, a licensed CPA and tax advisor based in Hong Kong. I focus on helping international entrepreneurs with everything from consulting to setting up and maintaining their Hong Kong offshore companies. Watch until the end. I'm going to show you 5 common but innocent mistakes that triggers these fees and smart ways to keep your account safe so your business never stop running. Let's dive in. Mistake number 1. Treating your business bank accounts like crypto exchange wallet. Many digital nomads hold assets in USDT or Bitcoins. You might think, I will sell my crypto and wire the cash directly to my Hong Kong business account to fund my operations. Stop. Do not do this. Hong Kong banks are extremely sensitive to crypto-related transactions. If they see a direct inflow from crypto exchange, even a regular one, it often triggers an immediate anti-money laundering fees because the source of funds is hard for them to trace instantly. To fix, if your business involves crypto, do not mix those funds with your standard operation accounts unless you have this special approval. Keep your fiat operations cleaned and separate. Mistake number 2 is retail spam. Let's say you sell a low-ticket digital course for $50. Or you offer coaching sections. You have 500 customers paying you directly via the bank transfer. To you, that is a success. To the bank, that is a compliance nightmare. Banks hate processing thousands of tiny incoming transactions from different individual names. It creates a massive KYC burdens for them to verify every single payers. To fix, you need a buffer system. Use payment gateway like Stripe or PayPal to collect these hundreds of small transactions. Then make one consolidated transfer from Stripe to your Hong Kong bank account once a week. The banks sees one incoming transfers from Stripe technology. That's cleaned, it's verified, and it keeps your account safe. Mistake number 3, the identity crisis. When you open your accounts, you told the banks you were a marketing consultant, but suddenly, 6 months later, you start sending huge wire transfer to a factory in China to buy electronics or heavy machinery. The bank's algorithm will flag this immediately. Your transaction pattern does not match business nature on your file. To them, this looks like you are hijacking the accounts for different purpose. To fix, be consistent. If you provoke your business model, you need to inform the bank in advance. Even better, open a separate account for that new business line. Do not mix completely different industry in one account. Mistake number 4 is sending company funds to unrelated persons. I often have clients ask me, Raymond, Hong Kong has threefold of capital, right? Can I send 10,000, 100,000 directly to my mother in Europe or my brother in India to help them out? Here is the distinction. Sending money to yourself, your own personal account, is totally fine. There is no limitations on that in Hong Kong. But sending money to your mother, your father, or a friend who is not a director, not a shareholder, and not an employee is a major compliance issue to the banks. To the bank, this looks like you are paying a third party with no clear business purpose. It looks like you are hiding the final beneficiary of the funds. To fix, keep it clean. If you want to support your family, transfer the money from the company account to your personal account first. Once the money is in your personal account, you can send it wherever you want. Do not skip this step. Final common mistakes, the ghost invoice. If a large transaction hits your account, let's say $100,000, the banks will ask for proof. That's normal. They want to see a contract, the invoice, or shipping documents. If your answer is, oh, I don't have a contract, we just agreed on a WhatsApp or WeChat, or if you send them a generic invoice created in Word with no details, that is a major red flag. To fix, you must have professional documentations for every major transactions. Even if you are a freelancer or a one-person company, you need a clean contracts invoice that match the payments exactly. If you cannot prove where the money came from, the bank has every right to fees. Here's the bottom line. If you follow these smart ways, using payment gateway as buffers, ensuring proper paper proof, and keeping third-party transfers out of the picture, you will have stable financial foundations. Of course, different strategies applies to different industry. For example, an e-commerce seller needs different banking structure than consultant. That's why you don't need a generic template. You need a tailored single package strategy for long run. Book a strategy call with me using the below link. I will walk you through not only the task optimizations, but also the essential business keeping tactics like this banking secrets. See you in the next one.